This is Rhode Island General Treasurer Seth Magaziner with a market update. With so much volatility in the global financial markets in recent months, many Rhode Islanders are probably wondering what's happening. What's the impact on my finances? And what does this mean for the state's finances, especially the pension fund? The recent market volatility began in China. China is the world's second largest economy, so the ups and downs of the Chinese market can have a big impact globally. Chinese stocks began falling in July, and the market trouble quickly spread to the United States and Europe after the Chinese government devalued its currency. Concerns over falling commodity prices and possible interest rate hikes in the United States have also contributed to the recent market movements. August's S&P 500 drop was the largest in 4 years. There's been a lot of talk about the stock market's decline in the last couple months. Many analysts say it appears to be a market correction and not a crash like in 2008 and 2009. Today, the S&P 500 is more than double where it was in 2009. And even in China, where the trouble began, the Shanghai Stock Composite is up more than 30% in the past 12 months. Let's talk about what all of this means for your personal finances. Rhode Islanders with savings highly concentrated in stocks have probably experienced a decline in recent months. It's important to remember that recent market developments are not an indicator of future trends. History shows that most portfolios will continue to grow over time. Experts advise against trying to predict what the market will do. Don't make rash decisions based on the daily ups and downs of the markets. The safest way to save for the future is to have a long-term plan and to stick with it. Now let's talk about what the recent market volatility means for Rhode Island's pension system. The first thing to know is that the pension fund will not have any trouble making its payments to retirees. The fund has more than $7 billion of assets and sufficient cash to meet its obligations. Our investment team is closely monitoring the market and the economic conditions to protect the retirement savings of every Rhode Islander in the pension system. The second thing to know is that Rhode Island's investment strategy is designed to protect against market downturns. After losing nearly 40% of our pension fund's value during the Great Recession in 2008 and 2009, Rhode Island moved to a new investment strategy to reduce the risk of another sharp drop. This investment strategy is specifically designed to protect us against market downturns like the one that took place in August. Rhode Island's pension system protects against market risk through diversification. While about half of the pension fund is invested in index funds that move along with the global stock market, the rest of the fund is invested in a diverse array of other asset classes that help minimize risk. In August, the strategy worked. While the global stock market was down about 7% in August, our pension system's non-stock investments had much smaller declines, limiting the overall decline of the fund to just 3.3%. If our pension system had dropped as much as the global stock market in August, the system would have lost more than $270 million more dollars. Diversification and careful risk management saved more than $250 million for the pension fund in August. Since January, the pension system has had almost no loss, despite the market dropping more than 3%. Even after August, Rhode Island's pension system has averaged better than an 8% return over the past 5 years. You can learn more about Rhode Island's pension investments at our new Investment Information Center on the Rhode Island Treasury website. Financial markets can be volatile and uncertain. We can't control what happens in China or on Wall Street, but by planning for the long term and avoiding risk, Rhode Island can weather the storm and meet our financial objectives.